Hey guys and girls, you're here with Pips, aka Pastor Pips, and I will be bringing you this week's market outlook. Without further ado, let's just hop straight into it. Before we get onto the economic calendar, actually, guys, I want you guys to head over to our website and check out www.litcapital.co.uk and book in a free consultation. Have a look at our website and have a look at everything that we have available for you guys to, of course, enjoy. Now, let's move over to the economic calendar. Starting off strong, straight out the block, we do have a retail sales for the Aussie on a Monday. And Tuesday, we have interest rate decision for the Aussie. Now, quite interestingly about the Aussie and the NZD alike, they have been very, very strong over the past 2 weeks. So we could potentially see that change. Pairs such as Euro AED, Euro NZD, they've just been sliding. Even GBP AED as well has been sliding all week. So this could definitely be interesting. We could potentially see some reversals. We have manufacturing PMI for the euro and also manufacturing PMI for the pound as well. We have GDP for CAD for the month of December, and we have manufacturing PMI for the dollar. We do have President Biden, who is speaking supposedly on Tuesday, but it is telling me that it's tentative. So that is subject to change, basically. Now, swiftly moving over to Wednesday, we do have German unemployment change, CPI as well for the euro, both for the euro. We have annual budget release, also tentative for the pound, and we have ADP, non-farm employment change, which is like the preliminary data that comes out really. We also have Bank of Canada interest rate decision, and as always, usually on a Wednesday, we do have crude oil inventories. Moving swiftly over to Thursday, we have some more PMI data for the pound, composite and services. Yeah, composite and services PMI for the pound. We have a potential count of monetary policy meeting for the euro, initial jobless claims, and Fed Chair Powell testifying later on during Thursday. Now, of course, on a Friday, at the start of every single month, we do have NFP, which is, a major market mover. We have seen a lot of market volatility, especially when we look at what's been happening around the world currently. So guys, do trade safe. It's dangerous. It's dangerous out here. But yeah, we do have NFP for the dollar on a Friday, retail sales for the Aussie, some more PMI data for the pound, and IV PMI for the CAD, with unemployment rate as well for the dollar. So yeah, it's quite jam-packed in terms of economic events. So make sure you are cross-referencing what these data are saying and the results of these data with your trades. Now, first things first, let's talk about the dollar. I've got a few pairs to actually go through with you guys today. Now, let's have a look at what the dollar has been doing, especially when we have a look at this weekly candle that price printed last week. So last week, we did get a push above the highs, which means that we did actually grab weekly liquidity. And of course, from grabbing and pushing and spiking above said highs, we are seeing the market pull back and fall down gradually. Now, looking at this, I would like to see the dollar continue its strength. But of course, a pullback and a retracement is always welcome. Now, the area that I will be looking is around this area, around 90, 96,240 for potential bounce for price to potentially push up higher. That would be my main outlook for the dollar, is to just continue seeing some dollar strength. Now, let's move over to gold. Now, interestingly, when we actually look at gold, and we look at it from a higher time frame perspective, we can also see that we did have a key level of structure, and we did have key liquidity areas that got grabbed. Now, the first area was this weekly high here, but then we also grabbed these highs as well. And as you can see, the size of that wick is crazy. It's dangerous. Now, without further ado, we are seeing gold come down lower. Now, realistically, with the dollar, potentially the dollar could come down. This should see gold push up. And with the dollar pushing back up again, once it pulls back, we should see gold continue to push lower. Now, technically, when I do look at this, yes, this is the type of play that I would like to see happen. Potentially get a mitigation of this 4-hour area. We see the imbalance fill and gold to come down lower. Potentially even test this level of structure here around 1877, which has been a very key level where price has actually held and rejected on numerous occasions. Now, right now the market is being very fundamentally driven. So, looking for some buys would be very, very ideal. Especially the situation that's going on around the world, especially with Russia and Ukraine. I don't see that dying down anytime soon. So potentially we should, okay, in the times of, market uncertainty and turmoil, we usually see commodities push up, such as gold and oil. So, realistically, gold can still potentially push up even higher. We may even see 2K on gold. That is a very, high stretch, but I don't see why we can't if investors keep, especially moving their money from stocks and cryptos and, pushing it into safer assets. I don't see why the likes of gold won't just keep on rising. So that is my play on gold. We may potentially come down lower and test this level of structure and then potentially go, because towards the end of last week, we did, of course, see price dump down and grab this consolidation, the liquidity of buyers here. We may potentially come down lower for some more buyers before pushing up higher. But like I said, there on the 4-hour, that's the type of play that I would like to see happen. But of course, we just have to look at the fundamentals, because fundamentals are really driving the market currently. There's a lot of economic data that I've just gone through with you guys not too long ago. So do keep your eyes on that. Now, let's have a look at GBPUSD. Now, the market did just open, which is fine. Now, looking at GBPUSD from the daily perspective, of course, we saw price mitigate this daily candle. We held it, and, for about a week and a half straight, we can see the market was very indecisive. And, that's due to fundamentals. Okay, it was a very uncertain time, but the technicals was pointing towards a GU short, which is what we talked about and sent out inside of our Discord community. So if you want our Discord community, go to the website. But yeah, so we did see GU dump down. I think it was well over 300 pips or something like that. Yep, there you go, 300 pips. We have come into a 4-hour area where we have already bounced out of towards the end of last week's market trading. Now, realistically, when I come down to the 15-minute time frame, I am looking for price to mitigate this 15-minute candle and then potentially push up higher. I would like to see pound USD correct some of this bearish move to the downside before we potentially see what price wants to do once we get up here. Realistically, when I do look at things from a daily, this could potentially break the high. It could potentially break the high, but as of now, because of how uncertain everything is, we just have to take it one step at a time and just trade carefully. So yeah, would at least like to see price come back and fill some of this imbalance before we can reanalyze the situation and decide or have a look at where price is likely to head to next. Now, another area, okay, is price could actually come back down lower to this daily area before we actually continue to see more of a push. So price may potentially come down lower, nothing to fear, but this is definitely an area I'd like to see GU at least react from and push up higher. Even though, yes, we can already have seen price react about 160 pips. All right, cool. So let's move on to, let's have a look at the S&P and US30. So when we look at the S&P 500, okay, let's go to the monthly. Now we are about 3-ish days, 3-4-ish days till the end of February, if I'm not mistaken. Someone correct me in the comment section. So yeah, looking at things from the monthly, we have just seen the stock market just slide. And like I said, is due to everything that's happening around the world fundamentally. And, it's really the time to pay attention to the fundamentals, because the fundamentals will definitely pay on this occasion, and they mostly pay as well when you pay attention, especially when we're looking at the stock market. So having a look at the weekly, we can actually see this weekly area, this weekly lit block here, where price has reacted out of in January, and we've actually returned back to the same area. Now, we are seeing quite a strong push The picture is a lot clearer on US30 than it is on the S&P. However, I believe that we are still going to see some more downside pressure, especially when we look at the stock market, when we look at S&P and US30. I don't believe the sells are done. I do believe JP Morgan did have a target of around 3,800, if I'm not mistaken. So 3,800 from where we are, or let's just have a look at where we were. It was about a 7% drop, 7.5% drop. Now, with this pullback, with this retracement, is now looking about a 13% drop. So remember, of course, the pullback allows us to potentially find a re-entry or an entry to get in so that we can actually profit from a much larger move to the downside. Now let's have a look at US30. Like I was saying, US30, especially when we look at things from the 8-hour candle, the 8-hour time frame, we can actually see price has held this area quite well. I was able to catch some buys, some smaller position buys from this low here, and just pretty much hit my take profit a very long time ago. Now we are in and around 3,400, which is the area where I would like to see, pardon me, US30 potentially drop. If we actually look at this level of structure over here, okay, we can see the area where price has actually struggled to break and held on many occasions. So we may potentially get a test. We may potentially see price slow down in around this area and then see price come down lower alongside the S&P. Now, guys, that is all for me in terms of trade setups. If you like to learn more and see more about trade idea, more about trade setups, make sure to head over to the website, www.litcapital.co.uk. That was a lot of speaking. Guys, make sure to check out our packages. Okay, if you'd like to have Discord access, it's only £25 per calendar month. Just go to the website or go to our Instagram, litcapital _ and send a DM, or go to my Instagram and send me a DM. It does not really matter. Okay, either way, the keys are in your hands. Okay, with that being said, guys, make sure to like, comment, and subscribe. And remember, every day is money day. Peace.